Hey, good Wednesday to every one of you. I'm Connie Hill, sitting in for Brent Morris today. Brent, I believe, has something very important to attend to. I believe he has a graduation of his last daughter, so I'm happy to fill in for him here today as we talk about things that are important when you're discussing an options portfolio. Now, today, at some point, I will show you something that is my most requested search. Using the scan tab and Stock Hacker is something that I report on quite frequently. If you follow me on X, I'll put some results out there from that scan that I run, and I try to run it just about every day. So I'll kind of clue you into that, where it might fit in as far as your options portfolio. Now, I am joined in the chat by Ben Watson. So glad Ben is there. Great friend, fellow coach, veteran of the market. He knows everything we're talking about inside and out. As you have questions, go ahead and pose them. I'll keep my eye on the chat. Ben will catch things maybe that I can't quite get to. He'll be responsible for that. So as you have the questions, let us know. And those of you that are listening to this on the recording, and I know lots of you are, when you have questions, go ahead and put it in the comment section. And we go back and review those as coaches every day. Make sure we get your questions answered as well. So I hope you are following me. I'm Connie Hill CS. Ben is Ben Watson CS. We'll post a little educational content throughout the day, things we notice that we think you might find interesting. We'll go ahead and share them with you. Let's go ahead and go through our disclosures, and then we'll get into our agenda here today. Options carry a high level of risk and are not suitable for all investors. What we talk about today is intended for education and information. Don't consider it a recommendation. We'll be using the Paper Money software application. It's for educational purposes only. I think it's a fantastic tool to practice and develop rules for strategies that are maybe new to you. Investing involves risk, including the loss of principal. Past performance of any security or strategy does not guarantee future results or success. Probabilities, if we talk about those, such as the probability of an option expiring in or out of the money, keep in mind it's theoretical in nature and never guaranteed. All right. What we like to do in this class, one, go out and look at what the market's doing. It's good to have that perspective before you go in and look at your portfolio. If you got a fairly bullish portfolio and the market's down on the day, well, you could have some down positions. Doesn't mean that it's time to exit them, but you want to have that lens to frame what you're looking at. Then we'll take a look at what you have going on in your current portfolio. I'm using Brent's portfolio here today, and maybe give you some different perspective on some of those positions. And then, of course, we always want to be building into our portfolio, so we're going to be doing that here as well. So let's go take a look at the markets first of all, and got the S&P 500 here. Now, hopefully you look at this every single day, and maybe even a couple times a day, all right? If you're an active trader, I think that would be fairly normal to do, but it kind of helps frame what, the kind of glasses you want to be looking through as far as your portfolio when you know the overall picture. And I'll tell you, one of the mistakes I made as a new trader was not paying enough attention to what the overall market was doing. I just was so laser focused on my positions. That was a big fault of mine in my early trading. So let's take a look. We've got the S&P here. We've got a 30 and a 10 period moving average here. And so, yeah, the S&P it's recovered quite nicely off its lows, and it's put in a pattern of higher highs and higher lows. The VIX, what has been going on with the VIX? Well, it's just been dropping, right? We had these huge levels out here at the beginning of April when volatility really spiked. That's most closely after it was announced that we were going to be having some tariffs, and what they were and how specific and how big they were going to be. That created a lot of uncertainty in the marketplace. Tariff talks with China have been reduced to at least in the neighborhood of about 90 days as far as putting it off, and that has settled the market down quite a bit. And so we can see the volatility index is just kind of sitting at a level that is not super high, but it's not down to its lows like 12 and 11. Right now, it looks like it's sitting at about 18 or so. Now, we're going to take a quick look at the NASDAQ as well. Let's get our NDX in there. just because it's one of the major movers on the markets as well, the stocks that are in that index. And so again, we're seeing it at a nice, healthy, higher highs, higher lows level. Has kind of been floating here above its 10-period moving average, not really making a lot of progress right now. So we'd maybe say our short-term outlook is maybe a little on the neutral side, but maybe would say bullish to neutral. Okay, don't forget that it is still bullish there. All right, let's take a look at your current market portfolio. Jump over here to the monitor tab, and the way I might approach some of these things is different than maybe how Brent might approach it. And so just know I'm not in cahoots with Brent. He could totally have other ideas, but I'll kind of give you some ideas that I might have. Let's start out here in the long vertical section. CRM seems to be humming along. We got a nice little profit in it. It still has quite a bit of time to work. These options don't expire until 30 days out. Okay, those are going to be the June 20 options. Plenty of time for it to work. Let's just take a quick peek at the chart. And I also want to show you on our working orders, we come down here and find CRM. It looks like there's an order sitting out there, a conditional order. Should we see what it says? That you'll take profits here. Once CRM gets to be greater than $260, which is where that short leg is. That's where it's sitting now to take profits. So if we pull up CRM here, and I did a little documenting on the charts because I like to do that. Looks like we entered the trade here. There should be an oval somewhere. I think it was around April 23rd. So I think it might have been in this area. Certainly is doing what was expected, certainly is making higher highs, higher lows, and it's around this 290 area. Now, when we looked at, I think I may have read that order wrong, is if the stock gets lower than or equal to 260, I said greater than, really would be less than or equal to 260, which not being the short leg, that's going to be the long leg, okay? So moving nicely in that neighborhood of where we'd want it to go, and so things are set up to get out if things don't go well, so that's good. Now, the other long vertical that we have here is on Duke Energy. Now, it doesn't have an exit order on it. I'm going to propose we put an exit order on it, but let's see what we've got going on here. So it's a 120, 125 long call vertical. It too has 30 days left. And we're down on the position a little bit, only $10 today, but overall the position is low. Let's take a look at the chart on Duke Energy. And if there are questions that you have as you're following along in the portfolio, feel free to put those questions in. Now, this one I did get the oval on. Been nice, upward trending stock, Duke Energy. They do electrical and I believe gas utilities in the south and kind of south to eastern area of the nation, the U.S. Okay, this is the day that the trade was entered into, and we can see, it had a nice pattern of higher highs, higher lows. Looked like it was bouncing off that 10-period moving average on the date of entry. We still have 30 days, but the strike price is up here at 125. That's where this stock needs to get to in order to be in an area where it would start seeing close to the max gain availability. So right now, it's not too disturbing. However, if this stock were to come in here and make a lower low, because it did here, it did one lower low, significantly lower than its low back here. And so if this rally is fizzling out and we watch it pull back, if it were to create a lower low here, then some people might say, man, this trade is not working out. Let's just salvage what we can and get out of here. Okay, so we are going to do that. We're going to say if we get to 125, let's get out. And then let's also say if it goes lower than, let me write down what the low is right here, 111.22. Let's get out. Now, you may have other conditions that you might consider getting out on. But if it pulls back here, it could just be in a pattern of forming a high, forming a higher low, and could possibly be recovering there. All right, so let's go ahead, let's put it on. And let's get rid of that. And let's go to the monitor tab here. Let's do a right mouse click. Let's say create a closing order. We're going to pick this top one. Top one will include both the strike prices. Can you leg out of the trade separately? You could. Okay, if you wanted to. If you needed to change the trade, you could do that as well. In this case, what we'd end up doing is probably keeping the short call, although not everybody has naked call privileges, which you'd need if you were going to say, oh, I've got to sell off this long leg. Okay, we're not going there right now, but let's do this. Let's do a first, not a first triggers, but just an OCO. And we're going to put two conditions on this order. So let's go ahead, let's create a duplicate order. And on this first one, let's go ahead and put on that condition. If it goes lower than that 111.22, we're going to get out. Or if it goes to our short strike price, if it gets up into that 125 area, great. We might be content to get out of the trade in either of those conditions. Okay, let's go ahead and put it on. We're going to have to change both of our orders to market orders because we don't know what the price of the options would be at that point. And on this first one, let's go ahead and put in here, let's move that up. If Duke gets greater than or equal to, we're going to do 125. Let's see here, 120. I've got an extra digit in there we need to get rid of. 125 even. And let's make sure our verbiage shows that as well. I've got to change my sign here. We need to make that a greater than or equal to 125, the long strike. Get out. We'll go ahead and save that. Or if it goes lower than the previous low, that will be if it gets lower, the stock itself, to 111.22. Make sure I've got all the ones in here. 111.22. Make sure our verbiage is going right. We want to get out. Now, it could be as the trade progresses that maybe these exit points progress as well. Okay, maybe if it puts in a higher low and goes up, yeah, you might feel comfortable saying, okay, we don't need to use 111.22 anymore. Maybe we could go a little bit lower than the low that it might form in the future. All of this is hypothetical, right? All right. Let's see. Let's go ahead and hit save here. And we're going to send that off. And see if it'll put it in the long verticals bucket. It will. All right. Now, on a day-to-day basis, really, you are trying to determine what needs to happen in whatever your positions are. And with an options portfolio, many of those are going to be shorter term in nature. And so you really need to stay on top of it. And I would go so far as to say, maybe once or twice a day, if you can, make sure you look at it. Now, if you're somebody that doesn't have access to your portfolio when the market's open, then certainly after the market's closed or maybe the next day before the market opens, just go out and take a look at your positions, make any adjustments. And I'll tell you, some traders find that they have greater consistency if they're active about managing their exits and adjusting those than if they're, kind of hands off, oh, I'll just use the original stop loss. Okay, that's why we want to be really active here. Now, another position that we could consider doing here. Let's look at BK. Now, this is a long stock position. We have 100 shares there, and it's doing really nice. We got in at 67. Right now, it's at 89.50. There is no stop on this, but let's go ahead and look at the chart here first before we make any decision. So we've got BK performing really well for us right now. I'm going to kind of zoom in here. Looks like it's still, the relative strength is in good position. It's up here in the overbought area. That just basically means buyers are in control. The MACD is rolled over, letting us know some of the momentum is starting to drain out a bit. In fact, when it peaked here, that's when the MACD started to roll over. And it's really not that high off their lows. However, what could you consider doing here? One, we could consider putting in a stop loss, which some people would do. The other thing I was thinking of here, what if we were to just sell a call? The timing here could be helpful to do like a legging in approach, right? Where The stock's had a nice little run. It's kind of at a peak point. So if we sell a call, hopefully we're bringing in some decent premium. And then as it pulls off here, maybe it pulls back 4 or 5 days. We don't know how long it would, pull back for, but as it does so, that allows us maybe to start locking in some of the premium, right? If we sell it, I'm going to say hypothetical $3, and then it starts pulling back, maybe we go buy it back for $1 and keep the $2. Okay, let's go see what we could find on BK right now. Now, as we pull it up, I did pick through the weekly options. They're not super liquid, but there is some liquidity here in the June options, which are about 30 days out. So let's come out here. Many times traders like to sell 20 to 40 days worth of time. So it's right in that sweet spot for these June options. And then they might look at, a delta of maybe a 30 something. Some people might even be a low 40 something delta or a high 20 something delta. And so we've got a few choices here. Here's a 36, a 32, a 29. All of those could be potential. Now, some of these don't have a ton of open interest, right? This 93 strike only has 8 open interest contracts. The 36 delta only has 34 contracts. So it would be nice if we could sell something in a bigger pool, okay? And so really what fits the bill here is the 92.50 strike. Lots of open interest. The bid-ask spread, I'm going to say, is a little bit wide. So let's see if we can get filled maybe at a little better than 105 by selling an option here. So we're just going to go ahead, select on the bid price here of the strike we're interested in, that 92.50. But like I said, maybe we can get it a little bit nicer price. Maybe we can get it, say, at 110. All right. That would help a little bit with that length there, or that width there. Some might even go up to the midpoint price. And actually, we could try this, see if we get filled on it. If we don't, we can always go back and change it. Okay. That would assist. Now, we only want to sell one contract. We have 100 shares of stock. And so unless we have naked call privileges, that's all we can sell. Okay, if you have 200 shares, you could sell 2 contracts, but you're not obligated to. Okay, you could have 200 shares and just sell 1 contract so that you're only creating that obligation on part of your shares. Okay, now Harry says, can you set stops after hours on stocks and options? Absolutely, Harry. You can change your stop loss at any time. I mean, I could put it in now, and I could go and change it again. 2 minutes later, maybe I put it in wrong or something. Okay, you're never charged a commission anytime you set it up. The only time you're charged a commission is when the trade actually executes. Okay, so you could change your stop loss 20 times. You're not going to be charged for it until it actually executes. All right, let's see here. Janelle, looking at your comment here, how do you determine liquidity in an option? Janelle, we're going to look at that open interest. Let me collapse this for just a moment so we go back here. This is my open interest column on the calls. And so some of these have a lot. What is a lot? Okay, whatever you're selling, you don't want to be a big part of the pool. Okay, if you're selling 1 contract and there are only, say, 7 out here, whoa, your 1 contract is, a big chunk of 7. So some traders will look to say, they don't want to be maybe 2 to 5% of the open interest. Okay, so say we're selling 1 contract, and that's that's a tiny portion of the big pool of 508 contracts out here. Okay, but when you have these smaller numbers, that might be a gauge for you. Man, I don't want to be more than 2 to 5% of the open interest. Hopefully that gives you a little bit more guidance there. All right, let's go back to our trade. And we're going to send this off. Oh, the midpoint price has changed a little bit. Interesting. It's a 227. That looks a little odd. We're going to go ahead and submit it for that 115 that we had seen earlier. And we're going to make sure we put this in our buckets of long stocks, synthetics, and hedges. All right, off it goes. Good, we got filled on that. Now, we can't be surprised if somebody takes our stock away, but right now it's out of the money, right? It would need to climb up to 92.50, so we've got a little bit more room that call can climb before then. All right, what else we got going on in our portfolio here? Let's look at Oracle. Oracle is down here, and this is a position that's been performing really nicely. Looks like it's synthetic because we have a long call at 150, and we sold a put at 150 as well. You know, you take those two deltas, add them together. Typically, when you initially get into the trade, and even as it moves afterwards, typically it keeps your delta close to 1. What does that mean? Well, for every dollar Oracle moves up between the two strike prices, then hopefully we're getting some similar activity. It might not be exactly a whole point that it moves every time Oracle moves a point, but many times it'll be kind of in that neighborhood. That's what we're looking at here. Now, this trade was put on May 9th. Okay, so just a couple of weeks ago. Let's go take a look at it here. We pull up Oracle. And let's kind of zoom in here. I went ahead and put a gray dot on the day that this position was entered into, and it's done really nicely. It's run up. It's kind of gone a little bit sideways here over the last 3 days. Now, that may hurt the long call a little bit, but that short put, man, it's working, right? We love to be short options when things maybe go a little bit sideways. We're feeling a little bit of time decay. So it's doing its job. So if it hasn't reached a target that maybe you guys had in mind for that, we're not going to disturb it. It's working. Let's let it continue to work. When would you consider getting out? Okay. One, somebody might consider getting out if it looks like the trend is changing. If all of a sudden, maybe bad news comes out on Oracle, who knows, right? And maybe it drops significantly, that it breaks through a support level, or maybe it puts in a significantly lower low. I mean, I would say the previous low is right here on the 6th. You know, if it were to form a lower low below that, well, that could be the beginning of a downtrend. And so somebody might consider it at that point. That's why it's important to just kind of look at it every day, check out what the news is, see what might be going on. All right, so Oracle, it's working beautifully. Now, as we come over here to our portfolio, there could be some areas that we could add to it. Now, I promised you at the beginning of our session, I would teach you my most requested scan. I'm going to do some different scans for different purposes. The scan I'm going to show you is called my early morning movers, bullish. I have a bearish version and a bullish version. And what we're going to do, I'm going to teach you how to run that scan. And then we're just going to see, hey, are there any stocks that came in here that might present some opportunities? The purpose of this scan is not really to build you a watch list to work off of, you know, over several days or for a month. This particular scan is more for, let's see if we can find something that's upward trending and maybe moving today that might have an opportunity for us. Maybe something you wouldn't necessarily see in your watch list that is, you know, say your basic watch list that you like to go through every day. All right, so let's show you. Come over here to the scan tab. And let's go ahead, let's reset it. And when you reset it, this is just kind of the beginning of what it looks like. Now, usually it has 3 there. Yeah, there we go. All right, first of all, price of a stock. We're going to limit this, okay? Typically, many traders like to not really trade small dollar stocks. So we're going to put a minimum on here of 10. If it's much lower than 10, then maybe there are reasons for that. And so even if something is $10, we're going to kind of look at it, make sure it looks like there's enough liquidity in there. All right. Next up, we're going to look for a change in the price today, which is what this variable does, the percent change. And this may vary, but what typically I'll do, unless we're in super bullish conditions, and we're in super bullish conditions, I increase this, but I'm going to put this at 1.5. Okay. At least some sort of movement here today is what we're looking for. And I don't cap it. You know, we could come in, you could bring back something that's up 50%. Sometimes that's interesting, not necessarily that you might chase something that's up 50% today, but it could be something you might want on your radar. Now, this volume represents today's volume. And if you're running this scan first thing in the morning, we don't want just today's volume. So we're going to get rid of this one. We're going to come over here to the X, and we're going to add on some new conditions. Now, this is a technical scan only. We're not even going to put any fundamentals in here. Okay, so let's go ahead. We are going to go to the study filter and we are going to add 3 studies here. Just as a reminder, the study filter doesn't work in your paper site. So if you like this search and you want to save it and run it, build it out on your live site, see what the results are, and then share that watch list so you can bring it in on your paper site. Okay, that's what you'd need to do. All right. This first study we're going to look at will be for the volume. Okay, and so we're going to go ahead. We're going to put in average volume here. And then we can choose the period of time, average volume over what period of time, and how many days here. I'm going to do something a little shorter term because this is really kind of a shorter term oriented scan. So instead of 50 days, let's just go with 20. That's about a month's worth of trading. Now by default here, it's looking for average volume of 1 million. Now, if you're somebody that maybe does a lot of option trading, you want to use it for that purpose, you might leave it at 1 million, could raise it to 2 million. If you're somebody that would maybe just use this for stocks as well, then you could lower that threshold. I'm going to leave it at 1 million. This is an options class, right? Managing an options portfolio. So that might be the minimum that we might want there. Although on my scan that I post for my class, I'll put it at 500,000. Okay, so my basic scan will be 500. All right, next study. Let's see, we want to add in trend. And what we're going to do here is we're going to put in to identify kind of an intermediate trend and then kind of a short-term trend. Okay, we're going to look for both. We don't want to find something that's been intermediate trending up and then maybe is trending down in the last month. Okay, so we're looking for some consistency that way. So let's go ahead here. We're going to choose price performance, and then we're going to choose price change. And we're going to determine exactly how big of a change we're going to look for. So in this one, we're going to go in and put in about 63. It has a little bit of a range, 61 to 65. So I'm just going to go in the middle right now. That represents about a quarter's worth of data. Okay, so we're looking for that could kind of give us the intermediate trend. And then we want on it, actually I did this, let me do it differently here. This is really where I want the 63. I want it to be 63 bars or days ago. And here we're not going to look for 63% up. We're actually just going to look for 15% up. Okay, so is this something that maybe is a real slow mover? Probably not. These might be oriented a little bit more to say growth stocks. Okay, so we're going to look for our intermediate trend that way. And here we're going to do another price change. And this one's going to be a shorter time frame. We're just going to do 21 days, which is about a month's worth of time. We're not going to look for it to be up a ton. Actually, we're going to look in the 5 day. We're going to look for 5% over the last 21 bars. I have got that backwards for a moment here. Okay, but really this is the percent we're looking for it to go up, and this is how long has it been going up. All right, that's what the aim of this particular study is about. Now I'll put in here, I mean it defaults to 50, I'll put in 200. We typically are not going to get back 200. That would be very uncommon, but let's go ahead. Anyone wants to know why the studies is not enabled in paper? I don't know. They did not check with me. It would be really helpful if they did, but they didn't. All right. Now this seems to be working a little bit here. I'm just going to change that to 50. Maybe that'll help it run a little bit faster. Let me just, okay, maybe I just 200, maybe it slowed it down a little bit or whatever. Okay, but it's bringing back 19 results. Now this will change over the course of the day. I could run this at, half hour after the market's open. It's giving things a chance to move, right? You could run it 2 hours later and it could be a totally different list because then maybe the stock isn't up a 1.5% anymore, right? Maybe it's only up 1%, then it would fall off the list. Or maybe it's even gone negative, okay? So these are stocks that don't necessarily have entry points, but they have trends that are bullish. They're up at least 1.5% today. They're at least a $10 stock. Now, if you like it, go ahead and save it. And so I'm going to save it here. And this is actually Brent's demonstration account. So he doesn't have that search in there. So I'm just going to name it. We're going to put it the early morning movers bullish. Again, I have a bearish version of this. They are out in the short videos. I think it's out in the short videos. We should check that and make sure. You guys know that we have some short videos? We do. Let's take a quick break and then we're going to examine some results here. We are just going to skip over here for a moment to our channel for Trader Talks. Okay. Hopefully you're a subscriber. You just click on that blue icon that's in your bottom right hand corner that looks like YouTube, but it's blue. That'll subscribe you over here to our channel. And we have our playlist listed here for each of the classes that we teach. Brent's got out here a library of classes that he's been teaching on managing your options portfolio and different things he's stressing. All right. So you can find them there. Now, I'm just going to come over here to the shorts because there are some short videos. And I thought mine was in here. It's not looking like it's here right now. But we do have some short videos. One that's been really, I think, really interesting here are free, 4 videos rather, on what is the trend for something short, something that's intermediate, something that's long. How do you actually define that? Okay. So again, they're really short, meaning like 2 or 3 minutes. I think they have to be less than 4 to qualify to be a short video. Okay. So Kevin's saying, hey, I love those shorts. Yeah, they're just a great little pieces that you can kind of pick up, little nuggets. All right. Let's come back to our search results. Now I'm going to bring up what we could do here on our watch list because we saved that study. Now we can come over here and we can find our early morning movers. Let's see. Early morning movers. Oh, is in there. Early morning movers bullish. Okay, that's the one that we just created. And if you save it as a scan, then you get this dynamic watch list that pops up. Okay, pretty much these stocks here are pretty much these stocks here, and it'll update itself as well. As things fall off and it refreshes, then it comes off the watch. Well, it'll come off the watch list. Now let's get over here to our charts. Let's maybe back up a little bit here. And there's some particular ones I sure hope they're still showing up. Here they are that we're going to take a look at. Let's look at XP. It looks like it's up a little bit here today, 29 cents. Oh, let's go ahead and link these. I'm going to link it to a 1 rad because that's what we've got up here on our stock. And here's our XP. Let's talk about what's going on here. It's been upward trending. Look at today. Today it put in a new high, $18.95. Looks like they had their earnings last night. And so today's the first day that it's trading based on whatever that new information is. What's interesting here is that it ran really high today, but it's not there anymore. It just kind of pulled back and settled in. So now it's only up about 1.64%. So it kind of gives you the idea that maybe there's some good news, but you're not really chasing the stock or chasing the trade. This, by the end of the day, could end up to be, I'm going to just stretch this a little bit differently here. Now, it's not here now because it's not the close of the day, but this could end up being a close above the high of the low day type of signal, right? We have our run up. We have our little pullback. 2 to 5 days is ideal. Sometimes it's shorter than that. Yesterday's high was 1886. Whoa, where is it right now? Exactly at 1886. Now, we're not going to be together today when the market closes, but we're going to enter this trade based on that it is moved. It's moved above the high of the low day. Okay, so let's do that. Let's go ahead to the trade tab. And this one, it's traded over 5 million shares today. So typically when we see stocks trading that with that kind of activity, usually the options are going to have some activity here as well. Now, what we're going to do here is we are going to treat this as maybe something we want to trade over a longer period of time because it's been trending really nicely. Now, it's really not that high priced of a stock. It's only $18. But what we're going to do here is we're going to go out in time. We're going to go out to the September options. And we want to buy something that maybe has a little bit of intrinsic value. Buying that far out, the theta value shouldn't be that big. So, that daily decay shouldn't make a big wear on something that's out 121 days. Look at this one here. We've got an 18 strike price. So it is a little bit in the money. At the money would be the 19. But look at this open interest. We've got 10,000 contracts out there. Maybe we can get filled here kind of at an in-between price, like maybe a midpoint level. Make it a little bit easier on the trader. We're going to go ahead. We're going to enter this trade and treat it as though we're trend trading it. Okay. But instead of costing about $1,800 here, this one's going to cost maybe $245. Hopefully a little bit lower than that. Okay. But that's going to be our theory of this. Let's see. NK, I'm seeing your question about the MMM. I'll come back to it. Okay, let's go ahead and get our trade in here. So we're going to go ahead with that contract. And the idea here is as long as this trend stays intact, we're going to stay in it. We're going to see if we can build some intrinsic value in that option. And because it's moving at a pretty decent pace. All right. Instead of 240, let's see where our midpoint would be now. Our midpoint would be about 218. What if we take this down to 215? Okay. Well, actually, I take it back, 220. Okay. It looks like it's trading in kind of some even increments. So let's do it at 220. We'll see if we get filled. If we don't, I'll go back and change it so it'll go ahead and get filled. But let's go ahead. Let's submit that for now. And I'm going to put it in this little bucket of, I'll put it in the long single options bucket. Okay. But knowing it's that far out, and we'll put a note in here, we'll say treat as, oh, that's not how you spell treat. Treat as trend trade. Okay. That's a note to ourselves, what we're planning to do here. We're going to go ahead. We're going to hit send there. Now, question came in from NK. NK says, tell us about this MMM thing. Now, this does not, let's come over here to the trade tab. Okay, this one does have an MMM. What is that for? You're like, I don't see an MMM. Graphically, it's like two M's on the top and one M underneath in a funky font. Okay, to me, it kind of looks like barbells. Okay, they didn't ask me for my input on the MMM, but essentially what it is the market maker move. That's what it stands for. Not all stocks are going to have a market maker move put in there. Usually it's because of some date. Okay, these guys had their earnings yesterday, right? They're just reacting today. And so the move that is priced in to the options is about, at this point, still about 34 cents. I'm willing to bet if we looked at this yesterday or the day before, the market maker move was probably higher than that, because that can be an indication of how much an expected move has already been priced into the options. Okay, but it's just for the event, which in this case is earnings. And so what this would mean is that it's looking for about 34 cents move. But if you were to hold on to, say, these options that expire Friday, the move that we would expect it to make would be more like 52 cents. Okay, so maybe 34 cents for the day. And then if you hold it longer, maybe about 52 cents. Watch this in stocks that have an earnings announcement coming up, and you can track that, see how that works. Yeah, Raymond had said the bid ask looked a little bit high on that last trade, and that's why we put it in for the midpoint. Absolutely. Now, Mark says, how do you make a note on a price trend line describing the position, say long call vertical or a stop, etc.? So the notes that you put in are for yourself to help you out, and then so that you can see what your notes might be to yourself, you need to add it. Okay, now we put this one in the long singles bucket, right? There's our XP. So let's go to this section and let's add a column for the notes. You'd have to do this for every section that you have here. So we're just going to type in note. Go ahead, bring it over. So there's our notes. We've added it to our columns. We'll say okay here. And now we'll see a little column for notes. And if you put your mouse here, why didn't it save our note? Maybe I'm clicking on the wrong one. No, that should have kept our note there that we were trend trading this. I'm not sure why that didn't stay there. Because if you don't have a note and you click on it, it's just going to be blank here. So maybe what we ought to do here is see if it'll take our note now. Okay, we'll put treat as trend trade, or for you who asked this, mark whatever the note is that you want to make to yourself about the stop or the trend or whatever it happens to be. Okay, go ahead, save that in there. Now this little icon appears letting us know, hey, you've got a note on that particular trade. Okay, nobody else sees it. All right. Okay, Kevin was talking about the move. What was 121 on 519? You might have been looking at this, or you said a think back. That per think back, you could see what it is. Perfect, right? Think back shows us the closing values of option prices on any given day, so we can go back in time. Perfect. Thanks for bringing that up, Kevin. I'm going to get another trade or two in here as time allows. Another stock on this that came up is LI. Let's see. Oh, LI isn't on here still. Let's see how much it's changed. Maybe I'm just being a little blind and not seeing it. LI was on there earlier when I ran this, and I would think it still meets the conditions. Maybe it doesn't. Okay. It does have earnings coming up. That'll be next Thursday. So people that maybe don't like to get into trades before earnings, this could be a consideration. This as well looks like maybe it's taking a bounce off the 10-period moving average. We'll see where it ends at the end of the day. Some people, as it maybe was up here earlier, might have looked like a little bit of maybe a flag breakout here. Okay, so again, we're not going to be together when the market's closing to see what the candle looks like, but we're going to treat this as maybe a little bit of a breakout. And look at the volume here today. Great volume. All right, we're going to come over here to the trade tab. And on this one, what I was looking at, we won't use September options here, but we will use the June options. And what I was looking at here was doing a short put vertical. Okay, so we're selling in that time frame. Many traders like 20 to 40 days worth of time. It's right there in the sweet spot at 30. We look typically for a 30-something delta, or maybe a low 40-something, or a high 28, 27, high 20 delta. So as we look at this, we've got a 29 delta here. We've got a 33 delta here, but only for contracts. And then we've got a 37 here, and then going to 41. What we're going to do is we're going to sell this 28, and then we're going to go out a full dollar to the 27. Okay, so we're going to spread this out a little bit more than what it'll do initially. So we'll go ahead, size that up, sell vertical. Let's change this to 27. Now that's a pretty healthy credit, isn't it? It is a little bit higher of a delta, 37 that we sold there, but still kind of in our parameters. Something that somebody might look at here is the probability right now of the option expiring out of the money. Many times, some traders will maybe even have it in their rules. They want it to be 60 or higher when they start out. So for some people, this one might not qualify. For the fun of it, let's do a blast all. And we're almost out of time here. What we could do is we could just kind of compare that to the 26, 27, actually 24 cents, 25 cents. That gives us about a 33% return. Then it falls into the category of 65%. I guess it just moved enough here to make that a little bit more of a feasible trade. Now, my time is up. And so what I'm going to do is I'll go ahead, after our class is over, I'm going to go ahead and put that out. So then you'll have that trade as well, sitting out in the portfolio in the short vertical section. Now, I hope we were able to answer your questions along the way. Hope you might have some fun using that scan, or when you see me post about it, you'll at least know, oh, that's Connie's most requested scan, and I actually know it, okay? Because you can go ahead and build that. So I appreciate your attention here today, and I totally forgot to check and see who's up next. But we're going to have somebody coming in right at the top of the hour, have a little 15-minute break here. Ben, thank you for helping me out with the questions here today. This is a great class that Brent has here. So go get a little snack. We'll regroup. We'll have one more session for you right at the top of the hour. So we'll see you there. Brent can follow up on these trades when he gets back. Thanks, everyone.